Alright, gang, it's your boy Nature, aka Nature. Alright, so we back for another video. Alright, so hammer and hanging man is the same thing. They look exactly identical to each other. Only thing is, the hammer is found on a downtrend, and the hanging man is found on an uptrend. Okay, so the hammer is a bullish reversal pattern that forms during a downtrend. Okay, it's named because its market is hammering out at the bottom. Alright, I already know this, but I'm going over it again. They look exactly identical. They both have long lower wicks, long lower shadows, and short upper shadows. Alright, so that's how you can tell it's a hammer or a hanging man, because they both have long lower shadows. Okay, so the hammer is a bullish reversal pattern that forms during a downtrend. It's named because the market is hammering out at the bottom. Okay, when price is falling on a downtrend, the hammer signals that the hammer signals that the bottom is near and that price will start rising again. The long lower shadows indicate that sellers push price lower, but buyers were able to overcome the selling pressure and close near the opening. Just because you see a hammer form in a downtrend doesn't mean you automatically place a buy order. More bullish confirmation is needed before you can safe pull that trigger. Alright, you need some type of bullish white Morobozo candlesticks, as you can see right here in the hammer picture, and you need two white Morobozo candlesticks above the hammer for that to be valid. Same thing with the hanging man. You need two black Morobozo candlesticks below the hanging man for it to be valid. Okay, so we need more information. More bullish confirmation is needed before it's safe to pull the trigger. A typical example of confirmation would be to wait for a white candlestick to close above the opening. So we will wait for a white candlestick. We will wait for a white candlestick to close above the opening, because sometimes the market does whatever it wants. You might see a hammer and it's still on a downtrend. So for it to be confirmed before we actually pull that trigger, we need, for this example, some type of confirmation will be needed. So we will wait for a white candlestick to close above the opening on the right side of the hammer. So recognition criteria for a hammer is a long shadow. It's about 2 or 3 times the size of the real body. Little or no upper shadow. The real body is at the end of the trading range. So this is at the end of the trading range. At the end of a downtrend, you are going to see a hammer. And the color of the real body is not important, even though with a hammer it will be white. Okay? The hanging man is a bearish. This is the opposite. They look identical. Remember, this is the opposite. The hanging man is a bearish reversal pattern that can also mark the top of a strong resistance level. So you find this at the top of a strong resistance level when price is rising. The formation of a hanging man indicates that sellers are beginning to outnumber buyers. Okay, this what this means when you see a hanging man. It means that sellers are beginning to outnumber buyers. Okay, for this to be valid, we will need 2 black candlesticks to close below the hanging man for it to be valid in a reversal in a downtrend. Okay, with the hanging man, okay, the longer shadows show that sellers push price lower during the session. Okay, buyers were able to push price back up some, but only near the opening. This should set off alarms, since this tells us that there are no buyers left to provide the necessary momentum to keep price from rising or raising the price. Okay, so this is a clear hanging man is a clear reversal pattern, single Japanese candle reversal pattern found on the top of an uptrend. It looks exactly identical to the hammer that's found on a downtrend. So a hanging man, the criteria for recognizing a hanging man is a long lower shadow, just like the hammer, which is 2 times or 3 times the size of the real body. Little or no upper shadows. The real body is at the end of the upper trend. So you will find a hanging man at the end of the uptrend. Okay, upper end is the real body is at the upper end of the trading range. The color of the body is not important, though a black candlestick body is more bearish than a white body. Okay, so they look identical. This is elementary. We're just going over it real fast. All right, so remember, they both have long lower shadows, and small upper shadows with small bodies. Okay, this is what a hammer and hanging man looks like. All right, so y'all already know that. We took quizzes about it, but we just want to go over it real fast. It's Japanese Candlesticks 101. So the next would be inverted hammer and shooting star. So the inverted hammer and shooting star also look identical. The only difference between is whether it's on a downtrend or an uptrend, just like the hammer and the hanging man. Okay, inverted hammer and shooting star look identical. Okay, so the inverted hammer is a bullish reversal pattern. A bullish reversal candlestick. Okay, um, and the shooting star is a bearish reversal candlestick. Okay, so shooting star is bearish, meaning it's going down. Shooting star, shooting down. And inverted hammer is a bullish reversal candlestick. Okay, so both candlesticks have petty little bodies, filled or hollow. Okay, and long upper shadows, small and absent lower shadows. So they have long upper shadows and small lower shadows. The hammer and the hanging man have long lower shadows, and the shooting star and the inverted hammer have long upper shadows, okay, and small lower shadows, okay. For the colors, the inverted hammer will be hollow, and the shooting star will be filled. Okay, so this is what the inverted hammer looks like in the shooting star. Okay, for this picture, it's kind of weird because the inverted hammer should be filled. Should be hollow, as you see right here, and the shooting star should be filled. Okay, but it looks like it's backwards. No, the inverted hammer and shooting star look identical. They both have long upper wicks. Okay, the shooting star is found on the top of an uptrend, and the inverted hammer is found on the top of a downtrend. Okay, so the inverted hammer occurs when price has been falling, suggests that a possible reversal is found on the end of a downtrend. When price has been falling, suggests that a possible reversal is likely. It has a long upper shadow. It shows that buyers try to bid the price higher. Okay. However, sellers saw that the buyers were doing so and said heck no and attempt to push the price back down. That's why you see the body. It as it back down. If you already watched all the OnlyFans videos, you know how to read Japanese candlesticks. We went over Japanese candlesticks, how to read it. Price will go up, making that long wick. It will open at the top and go up, making that long wick. Then sellers wind up pushing price back down near the closing. Okay, same thing with the shooting star. Okay, if you already know how to read that. Okay, so however, sellers saw that buyers were doing so and said heck no and attempt to push price back down. That's how it created that longer, lower upper wick, because sellers eventually pushed price back down. Okay, fortunately, the buyers have eaten enough of their Wheaties for breakfast and still managed though. They still managed to close the session opening near the opening. Since the sellers weren't able to close the price any lower, okay, this is a good indication that everybody who wants to sell has already sold, and there are no more sellers who are left, only buyers. Okay, so this is a clear reversal, a clear bullish reversal pattern when you see an inverted hammer. It's found on a downtrend. Okay, it has a long upper shadow. Okay, just like the shooting star, they both have long upper shadows. Okay, so a shooting star is a bearish reversal pattern that looks identical to the inverted hammer, but it's a bearish, meaning that it's going down. Okay, so the inverted hammer occurs when price has been rising. The shooting star occurs when the shooting star is a bearish reversal pattern that looks identical to the inverted hammer, but it occurs when price has been rising. Yes, it occurs when price has been rising. You can see the shooting star. It occurs when at the end of an uptrend is a reversal, a possible reversal pattern. Okay, very strong. Usually is a reversal pattern when you see a shooting star. Okay, especially on the daily or the 4-hour chart. All right, so a shooting star occurs when price has been rising. Its shapes indicates that price opened at a low, rally, pull back up, and then pull back down to the bottom. Okay, this means that buyers attempt to push the price up, but sellers came in and overpowered them. This is a definite bearish sign, since there are no buyers left because they have been overpowered. Okay, so this is what a shooting star looks like. This is what an inverted hammer looks like. Shooting star found at the top of an uptrend is a reversal pattern. An inverted hammer is found at the bottom of a downtrend, and it is a bullish reversal pattern. Okay, this is a bearish reversal pattern, shooting star, bullish reversal pattern, inverted hammer. Okay, so that's important to know. Alright, like I said, we got a cheat sheet at the end. This is elementary. We already went over this. You guys already know how to read this. We did quizzes on this already, but for some of our newbies or just fresh in mind, let's just go over it one more time. So what's better than single candlestick pattern, dual candlestick pattern? To identify dual Japanese candlestick patterns, you need to look at specific formations that consist of two candlesticks in total. So it needs to have two candlesticks in totals for a dual candlestick pattern to be valid. So in engulfing candles, there are two types of engulfing candles. You have the bullish engulfing and the bearish engulfing. Okay, so this is a bullish engulfing. You see how the white candlestick is engulfing the black candlestick. The second candlestick must be engulfing the first candlestick. Okay, for a bullish or a bearish engulfing pattern. Okay, the second candlestick must be engulfing the first candlestick. So the bullish engulfing pattern is a two candlestick reversal pattern that is signals a strong move may occur. It's found on the bottom of a downtrend. Okay, it happens when a bearish candle is immediately, so you see the bearish candle first, is made, okay, followed by a larger bullish candle. Okay, as you can see, a bullish engulfing. It's engulfing the bearish candle, the previous candle. Okay, so the second candle engulfs the bearish candle. This means that buyers are flexing their muscles and that there could be a strong up move after a recent downtrend or a period of consolidation. You usually see a bullish engulfing after a strong recent downtrend or a period of consolidation. On the other hand, a bearish engulfing pattern is the opposite of a bullish pattern. Okay, this is a bearish engulfing pattern. You see how the bearish candle is engulfing the white candle, okay, and the bullish is engulfing the black candle. Okay, let's go over bearish engulfing. Okay, the bearish candlestick is engulfing the bullish candlestick. Okay, so it's the opposite of the bullish, okay, pattern. This type of candlestick pattern occurs when the bullish candle is immediately followed by a bearish candle that completely engulfs it. Okay, so the bullish candlestick is going to first be seen because it's going to that lets you know that it's an uptrend. This is found at the end of an uptrend on a period of consolidation. After a strong uptrend or a period of consolidation, you're going to find a bearish candlestick. It will be first a bullish candlestick, then immediately followed by a bearish candlestick that completes the engulfing. Okay, this means that sellers overpowers the buyers and that a strong move down could happen. Okay, so this is what this means. Alright, so this is just the elementary. We already kind of went over it in depth already. So this is just a quick review. Okay, this quick review. Alright, we already took the quizzes. Alright, so you guys know this one. This is a double bottom and a double top. A tweezer pattern. There are two candlestick reversal patterns. They are both two candlestick reversal patterns. These type of candlestick patterns is usually spotted after an extended uptrend or an extended downtrend, indicating that a reversal will soon occur. There are two types of tweezer patterns, the tweezer bottom and the tweezer top. Notice how candlestick formations look like a pair of tweezers. Okay, amazing. They both look like a pair of tweezers. Okay, so this is the tweezer bottom and this is the tweezer top. They're both dual candlestick reversal patterns. Okay, a tweezer bottom means that price wants to head back up, and a tweezer top means that price wants to head back down. The most effective tweezers, these are the most effective tweezers following characteristics. Okay, so the first candlestick is, they both have to be opposite colors. Okay, so the first candlestick is the same as the overall trend. Okay, so the first candlestick is the same as the overall trend. As you can see, the first candlestick represents the overall trend. Then the second candlestick is the opposite of the overall trend. Okay, this signifies that if the price is moving up, then the second candlestick shows that it's bearish. Okay, it shows that price is moving down. All right, so the shadows of the candlestick should be as equal or as near equal in length. Okay, it should be as near equal in length, both candlesticks. Okay, the first candlestick should represent the overall trend, and the second candlestick should represent the direction of the trend when it wants to reverse. Okay, this is how you identify a tweezer top or a tweezer bottom. Okay, so the shadows of the candlestick should be equal or near the equal length. Okay, the shadows, right? The long wicks or the lower wicks, the lower wicks or the upper wicks should be identical. Okay, to the length, it should be equal or near equal of length. So the tweezer top should have the same height, while the tweezer bottom should have the same lows. Okay, so they said tweezer bottom should have the same lows, and the tweezer top should have the same heights. All right, so we kind of already went over this game. All right, so this is dual candlestick. This is elementary sessions. Just run through it. After this, I got a cheat sheet for y'all, so y'all can just, screenshot that, and every time you see this in the market, you can just go to your cheat sheet and look at it. All right, so triple candlestick pattern. What's better than a dual candlestick pattern and triple candlestick pattern? To identify a triple candlestick pattern, you need to look at successive formations that consist of 3 candlesticks in total. These candlestick formations help traders determine how price is likely to behave next. Okay, so are likely to behave next. Okay, so there are 3 candlestick patterns. Okay, there are some 3-stick candle patterns that are reversal patterns, and some candlestick patterns that signals that the end of a current trend is up, and that a start of a new trend is in the opposite direction. And there are other 3 candlestick patterns that are continuation patterns, which signals a pause or a sign of consolidation, and then a continuation of a current trend. So let's take a look at the popular triple Japanese candlestick patterns. We go over all the Japanese candlestick patterns, triple, double, and singles already. But let's just go over it real fast. This is a quick review. So even and morning star, you have the morning star and the even star. They are triple candlestick patterns that can usually find at the end of a trend. You can usually find these candlestick patterns for dual, single, or triple at the end of a trend. So they are reversal patterns that can be recognized through characteristics. Okay, the first candlestick represents the overall trend, followed by the second candlestick, which is indecision in the market, and the third candlestick will represent the reversal of the trend. Okay, as you can see in the picture, when you're using the even star pattern on the right, even star is found at the top of an uptrend and reversal for a downtrend, and the morning star is found at the end of a downtrend and reversal for an uptrend. Okay, so the first candlestick is a bullish. It must represent the overall trend, which is part of the recent. For the even star. I'm sorry, we're doing even star first. So let's look at the even star pattern right here on the example on the right. The first candlestick is the bullish candlestick, which is part of the recent uptrend or the overall trend. The second candlestick is a small body that indicates that there has been some type of indecision in the market. All right, and the third candlestick acts as a confirmation of the new trend. Okay, confirmation that a reversal in place has been placed, and that the candle closed below the midpoint of the first candle. Okay, it closes below the midpoint of the first candle. Okay, it won't close all the way below. It'll close midpoint of the first candle. Okay, so for that to be for morning star or even star, you see how they both close midpoint on the morning star too. All right, so that's how you recognize this. This is a quick review. This is why it's quick. 3 white soldiers and black crows. The 3 white soldier pattern is formed when 3 long bullish candlesticks follows a downtrend. It follows by a downtrend with 3 bullish candlesticks confirming the white soldier pattern. 3 long bullish candlesticks followed by at the end of a downtrend. It signals a reversal has occurred. So it's found at the end of a downtrend when you see 3 bullish candlesticks. That's the 3 white soldiers. Okay, the reversal that price wants to head back up. All right, same thing with the 3 black crows. All right, it's found at the end of an uptrend. We see 3 black bullish candlesticks. It signifies that price wants to reverse. This is a type of triple candlestick pattern. Is considered as one of the most potent in your face bullish signals. As far as the 3 white soldiers, this is bullish. You see this a lot in the market. So especially it occurs after an extended downtrend or a short period of consolidation. Okay, so the first 3 white soldiers is called the reversal candles. It's either ends the downtrend or applies that a period of consolidation that follows the downtrend is over. Okay, so for the 3 white soldier pattern, to consider valid, the second candlestick should be bigger than the previous candlestick. Okay, you see how the second candlestick is previous than the first candlestick. That's how you know that it's valid. Okay, so the second candlestick should be bigger than the previous candlestick. Also, the second candlestick should close near its high, leaving a small or non-existing upper wick. Okay, small or non-existing upper wick. You should see that. Okay. Also, for the second candlestick to be valid, for the three white soldier patterns to be valid. Okay. Also, the second candlestick should close near its high, leaving a small or non-existing upper wick. And for the three white soldier pattern to be completed, the last candlestick should be at least the same size as the second candlestick or bigger, and have no small or no shadows, no wicks. Okay, it should be a clear, bullish candlestick. Okay, so that's how you know. All right, this is a quick review. As far as the three black crows, the candlestick pattern is just the opposite of three white soldier. It's formed when three bearish candlestick follows a strong uptrend. This is found. You'll see a three black crows found after a strong uptrend indicates that a reversal is at worst. The second candle body should be bigger than the first candle, and it should close at the very near its low. Finally, the third candlestick should be the same size or larger than the second candlestick body, with a very short or no lower shadows. For this three black crow pattern to be completed, the last candlestick should be at least the same size as the second candlestick and have a small or no shadows. Okay, the third candlestick should be bigger than the second candlestick, and it should have small or no shadows, wicks. Okay, so then we have three black crows. Candlestick pattern is just the opposite of three whites. Oh, Lord, went over that. I'm sorry. The three inside up and three inside down. Okay, three inside up, three inside down. The first candlestick represents the overall trend, followed by the second candlestick, and the third candlestick should be the same. The three upside up candlestick formation is a trend reversal pattern that's found at the bottom of a downtrend. This triple candlestick pattern indicates that a downtrend is possibly over and that a new uptrend has started. Okay, when you see a three inside up, it's found at the end of a downtrend. It's one bearish candlestick followed by two bullish candlesticks. Same thing with three inside downs. One bullish candlestick followed by two bearish candlesticks. Okay, for this to be valid, this three inside up or three inside down formation to be valid, the first candlestick should, for the three inside up, the first candlestick should be found at the bottom of the downtrend. Because three inside up is found at the bottom of the downtrend. Okay, and the characteristics should be a long bearish candlestick, Okay, then the second candlestick should be at least make up midpoint of the first candlestick. As you can see, it made up midpoint of the first candlestick, and then the third candlestick needs to close above the first candlestick and the second candlestick. Okay, it needs to close above it, which you see closes above it. For the third candlestick, close above the first candlestick to confirm that the buyers have overpowered the strength of the downtrend. For the opposite, for the three inside down, the candlestick formation is found at the top of the uptrend, meaning that it's an uptrend possibly over and that a new downtrend has started. The three inside down candlestick pattern formation needs to have the following characteristics. The first candlestick should be found at the top of the uptrend, representing the overall trend. A characteristic should be a long bullish candlestick. The second candlestick should be a bearish candlestick. It should make up midpoint of the first candlestick, and the third candlestick needs to close below the first candlestick to confirm that the sellers have overpowered the strength of the uptrend. Okay, so alright, gang. Our next video, we are going to go over Japanese candlesticks cheat sheet for y'all. Alright, gang. So this is just a quick review of Japanese candlesticks 101. Alright, part 2. Next, I got the Japanese candlestick cheat sheet for y'all. Alright, so gang, it's your boy Nature, aka Nature, gang.